As you said, this session will be kind of co-hosted by myself and Simon. Simon will introduce himself in a second, but basically Simon is the HR director of a company called Agilisys. They're around a 2,000-person organisation, employee-owned, focused on business services, and they're one of the biggest employee-owned companies after John Lewis. So the topic that we're going to focus on today is financial wellness and kind of delving into it in a little bit more detail. Specifically, what financial wellness actually means. It's certainly a kind of a topic which is talked about a lot at the moment. As an employer, should you care? And if you care, what it is you might be able to do about it. I'll very briefly just explain some of the kind of context, why this is a subject we really kind of passionately care about. And then Simon will take you through it more from an employer's perspective in terms of how they identified that this was a need in the organisation, how they looked at the market, and what they looked to do about it. So if we start with what financial well-being means, there are lots of different definitions. The definition I particularly like is around what actually does good financial health look like. So what does it mean if your staff are financially healthy? And that basically is three stages. The first stage is if someone is financially healthy, they're in control of their day-to-day or month-to-month finances. So simply put, if you earn £100 each month, and if you spend £90, then the two are in match. That's kind of, I guess, quite basic, but I guess for a lot of the population, those two things don't always match. The second thing about being financially healthy is that you have a buffer for unplanned spend. So let's say your car breaks down or your boiler breaks down. Actually, you're not panicking. You've got some money there. And the third stage of financial health is that you're actually saving for future goals, and those goals change with your life stage. So that could be your saving for your first house, it could be your saving to have children, all the way through to planning for your retirement. And we generally see financial health and well-being as a journey along those three stages. And if you take the flip side now, and if you almost kind of imagine your kind of employees at work, and then we'll kind of go through what the flip side is, which is if you're financially unhealthy. And we always kind of compare financial wellness, similar to kind of physical wellness or kind of mental wellness. Those things can often be a little bit more kind of outward and overt. So in the US, for example, obesity is an issue you can kind of tell, but actually when it comes to financial health, it's not always so visible. But if someone is financially unhealthy, then what that means is that each month they're spending more than they earn. So in the back of their head, they're worrying about that bill they just can't pay. It means that they have no buffer for unplanned spend. So let's say it's winter, they have children and the boiler breaks. They're kind of stressed about how they get the money to fix it. Or it means they're working day to day, month to month, year to year, but they're not saving towards financial goals. Life just kind of carries on. And you can start to see that if you have people in your organisation in that position, actually they are probably not as focused as they could be to perform as you might want. So the question then comes, what is the general state of kind of financial health amongst workers today? I think almost every month there's a new report which gives you figures on this. And actually every report is very consistent. We ran a YouGov poll a few months ago now. And some of the headlines were, 49% of employees, 1 in 2, worry about their finances. 1 in 5, or 18%, actually lose sleep about it. And the reason why employees are really starting to care is that 1 in 3 says it impacts their productivity at work. So not only do we think, employees should care from a moral perspective, but also from a direct performance at work perspective. So what's causing the problem? There's basically two sides to the spectrum. For higher earners, that's not to say they don't have financial worries, but as a general rule, they tend not to be in financial distress. They're more about optimizing their position, and traditional banks actually offer them very good products, whether it be advice, kind of savings, kind of investments, whatever it may be. Where the kind of real issue and where we see the kind of poison in the system is with middle to lower income earners, where they are saddled with high cost debt. And if I kind of paint a very kind of a mainstream story almost, if you look at teachers, very middle income profession, people work really hard within it, people work really hard to get there. Last year, 20,000 teachers took a payday loan. So that's about 7% of all teachers. And a payday loan is a very extreme form of lending. It comes with interest rates of 1,000% or more. You only take a payday loan if you have no other options, basically, if mainstream banks, financiers don't offer you a solution. And the reality we have in banking, and I spent kind of 12 years of my career in banking, is that Banks serve higher income people extremely well. They're falling over themselves to give them advice, to lend them money, to take your savings. But if you're a middle to low income person, you often don't have a brilliant credit score. And as a result, you tend to get very high interest rates, or you tend not to get access to mainstream finance. And what that does is leaves you in a trap. So for those 20,000 teachers last year, as soon as you've taken one payday loan, no mainstream bank will ever lend to you again, or certainly not for 5 years, because they think you're a bad risk and they'd much prefer to lend to people who earn more and are generally considered to be at low risk. So what we have is a very significant portion of middle to lower income people who have very high cost debt, and what that debt does, it eats up their disposable income. And if you don't have disposable income, you can't even get onto the first stage of being financially healthy, because you don't have enough to balance the books each month. You certainly don't have enough for an unplanned spend, and you certainly can't be saving towards financial goals. So 18 months ago now, this is something I recognise both from my time in banking. I also have 2 children who have a nanny. Each month I would pay her, and I could just see the money going straight to high-cost lending. And so, I wanted to come up with a solution with this. I then partnered with Dan Cobley. Dan ran Google in the UK for 8 years. I partnered with Daniel Shukani, who's a social impact entrepreneur. And we essentially raised, an amount of money to try and build a solution to this and really help employees on this journey using technology. Our first product, which Simon will talk through in the context of an employer, is very simple. It's trying to take the poison out of the system, which is basically we focus on middle to low income employees who have very high cost debt. We refinance their debt for them. We offer them all a single low interest rate of 7.9%. They know if they pay more than that today, if they move to us, they will save money. The average person switches in £2,500 of existing debt to us through lower interest rates. They typically switch into us between 30% to 1,000%. By reducing that to 7.9, we save them £900. We get them out of a debt a year quicker, and then we help them on the path to kind of savings. And then kind of finally, before I hand over to Simon, so, and the question really comes, as an employer, do you care about this? As a general rule, finances have been considered to be personal, so should you care? And as a general rule, actually, almost every employer we speak to, in the last month, we've launched 3 FTSE companies, and almost every employer we speak to does care. So it doesn't almost feel like it's a kind of a sell anymore. But one of the issues is, from an employee's perspective, while 7 in 10 employers say they care, only 1 in 10 think they do. And so one of the reasons for inviting Simon is Agilisys absolutely do care about their employees, and they do care about their kind of wellness. And so kind of Simon can take you through kind of their story from an employer's perspective.
Thank you very much, Asesh. Thank you. Good afternoon, everybody. I hope everyone's having a great conference. It seems really well organised, and I'm looking forward to seeing some of the sessions this afternoon as well, so here for that purpose too. But and we've a chance to ask some questions a little bit later on, and I would like to show you a short video, so you don't just have to hear it from me, from some of our employees and some of our kind of managers that have been involved in this. But what I want to talk a little bit about is just our experience as an organisation. Agilisys work primarily in the public sector. What we do is we help our clients transform the services that they deliver to their citizens and to their customers through the use of technology, through products and through services. And we have a great demographic really across that 2,000 people, a whole different range of different employees. We have about 600 contact centre employees, about 200 sort of back office processing employees. We have consultants, we have IT managers, IT service engineers. So we often have problems ourselves with determining what are the right benefits for employees that's going to work across the organisation actually. So we're always thinking about these things. And I think what makes us quite an interesting case is that just over 12 months ago, we incorporated as being an employee-owned company. So 57% of our company is now owned by our employee base. And that makes you take an even deeper step into thinking about the benefits of your employees, their well-being, their financial well-being. And on the back of that, really, we started to look into whether this financial element was a concern for our employees. And we did that very simply. As an employee-owned company, we now run quite a lot of employee surveys and ask our employees a lot of questions, or employee owners, I should say. And so we ran an employee survey and asked the question about financial well-being. Were people sort of feeling the pain and the stress? And it's not a surprise to you now, and you probably wasn't anyway. If you're at this conference, the chances are you have some idea around these things, but it was certainly a surprise to us that nearly 1 in 3 of our employees told us that they had some form of financial concern and that they were bringing that to work with them and they felt it affected their productivity. And when you hear that sort of information, I think think it makes a lot of sense to say two things really. One, what can we do about it, because we're now owned by our employees and we're there to benefit our employees, so what can we do about it from that perspective? But also I think any business would just think, what can we do about the impact on productivity? How can we sort of see that and do something about it? And so we looked in the market. As it happens, we were familiar with a company called SalaryFinance, but I had some reservations, it is fair to say. There's a couple of things initially. There's lots of questions that come up when you engage with anything like this, I think. But two really big ones that came up are, is it the sort of right thing morally for an organisation to encourage any kind of lending of any kind, to sort of advertise, if you like, lending for their employees? And I think that is a big question to answer. And fortunately, again, our approach to it was exactly what SalaryFinance's approach to it has been, which is that we would not encourage new employees to take on new debt, or any employees, sorry, to take on new debt. We would always be suggesting that people who are currently in debt, currently have these high rates of interest, the Wonga type loans, that kind of thing, to consolidate and improve it. So we're not about trying to encourage people to take on debt. And that actually really is important to us. As I say, we work with the public sector. We provide a lot of work, for example, for Citizens Advice. If you phone the Citizens Advice in the UK, you probably speak to one of our employees, and they're very much about reducing debt, reducing consumer debt, that kind of thing. So that was very important to us. And the other was also that, just from a purely company perspective, that we aren't sort of liable around it. So we're not funding this. If an employee leaves the business, we don't have some kind of liability or have to pay that back. It's something that is about facilitating a good relationship between the lender and the employee in that way, rather than us kind of being in that mix. And again, that's the approach that SalaryFinance takes. So, as I say, loads of other questions, but with those two mainly answered, we decided to run a trial within the organisation. And we ran a 6-week trial across around about 600 employees in our contact centre business initially, which was probably the area where we had the most impact and concern and sort of financial wellbeing challenges. It's an area that we already run an employee assistance programme across, and we do hear kind of about financial challenges. But so we thought it was the right sort of demographic of people to start off with. And the results were very good. We're seeing about sort of 6% take-up, which for people who have introduced any benefits like these in the past is a very good rate, and that's kind of accelerating as time goes on. We saw in the first trial, typically savings of over £500 per person. One individual saved it was £1,400, and we're seeing them typically in the range of between £500 to £1,000. So a really tangible difference for the individuals involved in this. But the data's one thing. What was also really good was the feedback from the people involved in it. So we were seeing, by word of mouth, these people talking to other employees around the business and saying, you should be getting involved in this if you're aware of it. And we actually had enough demand from the other divisions in the business that we decided to accelerate our schedule and sort of roll it out across the wider organisation faster than we'd otherwise planned to. And again, we are seeing that take-up, we are seeing that feedback. I guess you look for feedback from the people themselves. How are they finding the experience, which has been good. SalaryFinance make it easy, and they're very straightforward. If people are going to be eligible for it, they are eligible for it and can go on through. Some people aren't going to be, and they're kind of given very clear reasons as to why that happens. So it's very straightforward. And just from my team's perspective as well, it's been administratively quite straightforward. There hasn't been a huge cost or overhead to that. Our payroll manager, again, had some concerns in the first place. Is there going to be a lot of extra work every month? There isn't. It's the exchange of a couple of spreadsheets and some sort of processing, but not a vast amount of it. So, it's been a very positive trial. It's been a very positive rollout for the company. And really, that's what makes me willing to stand here and sort of explain that to other people and encourage them, because I do think that financial well-being is really important. It's something that we recognised and were surprised at, and we're seeing that feedback, and we're hoping to start measuring that very shortly as well. So we've just rolling out a new engagement survey for the organisation that will specifically ask some questions around financial well-being, and we hope to see measurable, tangible improvements from this as part of it. It's certainly something we're going to be measuring over the next 12 months. So look, there'll be plenty of time to ask questions if people have them in a moment, but what I would like to do is just hear a little bit from our broader employees and from our customer services division where we trialled this. Hopefully this will work when I press the clicker. Or do I need to click somewhere else to make that? There we go.
Agilisys is an employee-owned business. Within the customer service division that I'm responsible for, we employ about 800 people. SalaryFinance is part of a range of holistic benefits that we've offered to staff to enable them to manage their money better. Having been through a loop of questioning, getting to understand the product, the benefits, and hearing firsthand from my own employees, I think it's a fantastic benefit.
We've had staff who have really got into difficulties financially, and they've had bailiffs come in to their homes trying to take possessions, etc. And that's had a real impact on their mental well-being.
So we've had a number of advisors that have used or benefited from SalaryFinance. One advisor in particular consolidated all of their debts and actually saved approximately £150 per month, which is a great result for them.
So I took the loan out because I had a really bad interest rate credit card. At the end of every month, just before payday, it was a kind of, I've just paid the bare minimum. The balance, you know, they send you text messages, you see it online, and it's just a kind of, I'm never going to get rid of this. Don't think about it anymore. I get my pay slips in, I see that minus deduction for taking it off. It doesn't even factor into my life anymore.
It feels fantastic to be able to relieve the pressure that people might be experiencing in their personal lives when it comes down to managing their finances and managing a debt burden that might be too great for them. So it's very rare that you get the opportunity to offer a staff benefit that impacts the individual entirely outside of the workplace.
Oh, cutting out the credit card was fun. It was good fun. Cut it up, threw it in the bin, and I do not have to speak to them again. It was a very good feeling.
The music bed.
Thank you very much. We do have time for a couple of questions, and there are some on Slido, I think, so if we could flick over.
Oh, yeah.
That'd be good. Can you see them? No, you don't have to.
Oh, no. Okay.
Got them done? Okay, I'll ask if I can see them. Excuse me. Ask a question, is that all right? Yeah, you can, yeah.
I'm interested in whether or not, I look down the delegates list, I'm the only one representing the police service here, and that is a big issue for us because of the vulnerability of officers, PCSOs, in terms of attracting unwanted attention, in terms of potential blackmail, pursuing, looking at computer systems for money. So I'm interested in whether you've got police forces on your custom sheets.
We don't have any police force at the moment, no. Mainly because it's not a sector we've kind of approached. I guess the organisations which we're in at the moment are kind of retailers. So retailers like Dunelm, they've got about 10,000 employees across the country. Public sector, kind of Agilisys, we launched 2 FTSE companies kind of last week, about 10. So we've got a whole range of sectors. Police is one we've not so far approached, but kind of certainly happy to look at whether there's opportunity there.
Asesh probably won't know this, but about 200 of our employees,
Okay.
about 200 of our employees did transfer in from police forces. Actually, we run services for local police forces and local authorities. So actually, around about 200 of ours were from the police background and still operate services for police now. So if it's useful at any point, be happy to sort of chat through that, and you could always sort of talk to some people involved in it if you're interested.
Thank you. These were all the questions I was thinking about, so that's good because it means I wasn't so known. How do you get over the issue of Big Brother watching when ascertaining which employees are interested in debt management?
What do we think the question means?
Well, I guess your financial state is a very personal thing, particularly in Britain. We don't normally talk about it, do we?
We don't intercede in the process, so they don't have to come to us to ask for it. You know, it's the platform's available to employees. They can go directly to SalaryFinance. They can go through that through a link themselves. They don't have to go through the employer. We make it available, we facilitate it, and we don't receive reports on individuals or anything along those lines. That's entirely confidential. So there isn't a Big Brother. We facilitate the access to it, but we don't monitor
so you don't
it.
Find out.
No.
And is there any reason an employee would not be eligible for a loan?
I'll ask. There will be, but I'll let Asesh answer that one.
So there's 2 things we look at. One is the employee must have worked for more than a year. So just to kind of give us confidence they have tenure. And then the second key thing is that they're able to afford it. So we do an affordability check on everyone to ensure that anyone we're lending to, we're not going to add to their stress. Basically, we're going to take it away. So they're the 2 things we look at.
I'm conscious people are queuing outside, but really quickly, what happens if someone leaves?
There's certainly no liability on the employer, and I'll let Asesh talk about
we
what
move them to
happens
direct debit. It's a very seamless process.
Got another way of doing it.
Exactly.
Yeah.
Any correlation between pay satisfaction and the launch of the benefit?
Not yet, because we're only going to start measuring it really shortly, but I'll report back on that in sort of 6 months, 12 months' time. But I think there will be. But thank you.
Thank you very much.